Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. So for those of you who are completely new to the channel, here's where we cover all things market profile. So it doesn't matter whether you're a futures trader, you are a forex trader, and I know you guys love forex, and I keep saying this because I know you guys love forex, but it doesn't matter what you trade, right? Over here, what you get is the real deal, right? I don't mince my words. I've been in the business for a very, very long time. It's more than 15 years for me. So there is nothing I don't know. I have a massive institutional background. There's absolutely zero I don't know. And what I found across the internet, especially social media platforms, is a lot of disingenuous people trying to talk to other people about trading and investment, and they're not approaching it from a realistic standpoint. So what we do here with this channel is taking my time, my expense. I have created the same tools that you're going to find people in institutions using, whether that's in New York, whether that's in Chicago, whether that's in London, whether that's in Frankfurt, whether that's in Zurich. You are going to find the best traders and the most professional traders using these tools, and I've decided to recreate them for you so that I can provide you with the kind of content that you need when you start out in trading, which is what you don't see around. Most of these people below and above me in the social media scroll feed are misleading you, and that is what we're going to put an end to, and that's why this channel exists. So if it's the first time you've come here, well, welcome aboard to see for yourself. Alright, so today I want to talk a lot more about futures, right? So I want to talk to you about the best futures trading strategies, ideas that you should be using if you're coming into this business. There is a lot going on now in futures, right? Ever since the rise of online proprietary trading firms, or prop firms as they're called, there has been a plethora of people who've been wanting to get into futures. Now, I'm not going to sit here and bullshit you guys. This prop trading stuff, flip, I really do not know. Right? I honestly do not know.
I don't know.
Why people are doing this as opposed to doing what they should be doing, I don't know, right? But I'm not going to get into that. That's probably for a whole entire new video. I'm just not going to touch on the prop firm topic. Now, prop firms are not new. They've been around for ages. Some of the very famous prop firms that were in London, for example, Futex is a very good example of a prop firm. These were decent outfits to a large extent. They were decent outfits, and their focus was helping traders get better. Some of the very flamboyant names in the business, and for those of you guys who don't know, one of the most intriguing stories of probably a generation in terms of traders was a story about Navinder Singh Sahwal, which is an amazing story. And I believe, what's the name of the guy? I can't remember the author's name, but he wrote his book because, he got in a bit of a pickle. It's a really interesting story. If you haven't read it, just go in and Google Navinder Singh Sahwal, trader, got into certain trouble in a certain year, right? And was accused of causing the flash crash. But it's a really interesting story. I think Liam Vaughan, that's it. Liam Vaughan is the author of his book, and it's an amazing book. But Navinder Singh Sarao started out in Futex, right? And that's where he really cut his teeth. And there's so many other people that you probably know today, or you might have seen on social media, that came through Futex, right? So again, there were days when this was decent, but now, I mean, all of these people just want to sell courses.
I made a lot of money off of them.
Right? No offense, right? Sell your courses. I mean, at the end of the day, education has value. And if education has value and people are willing to pay for that value, then it's a business model, it's a revenue stream. As a trader, you're an entrepreneur first. One of the things that really gets to me is people think that trading is a religion, right? That when you're a trader, you're nothing else. You're just a trader. It is a load of BS, right? If you are a trader, it means that you're probably something else too, right? Because trading is one of those things that, as much as people like to have you believe that it has to dominate your life, it pretty much doesn't. You know, you can make a decision about what you do, and when we come into the meat of this video, you're going to see exactly what I mean. You don't need to spend 24 hours on the screen. You don't need to trade every day. The biggest mistake that most traders make is to come into trading thinking about it as a job, that it's a replacement for the 9 to 5. So instead of doing 9 to 5 in your job, you do 9 to 5 in trading. That's not what it is. And I'll do a whole another video about what trading really is, but I'm not going to get into that right now, because that would just pretty much take me half an hour, and we're going to lose all of this video and all the good stuff I'm about to tell you talking about trading, what it is, right? So I'm going to leave that for another video. But trading is definitely not you sitting there replacing your 9 to 5, doing another 9 to 5 in trading. You got to ask yourself, what is the sense in doing that? Trading is hard. Trading is difficult. It's difficult in the sense that it's going to require a lot of emotional intensity, and it's something you're going to have to give. It doesn't matter who you are, how good you are, you're going to have to give the emotional side, and that is difficult. You know, and at the end of the day, it's what holds people back from succeeding, is that they just can't get their head around the emotional side of trading. But for a whole nother video. At the end of the day, if you decide to become a trader, also think about what else you want to do with yourself, right? Because honestly, I can assure you, if this becomes your life, it will destroy you. It will eat you up from the inside out.
How do you say that? A heated mess. You know, a mess where heat is applied to it, so what once was a little messy is now even messier.
You want to be good at this. You want to be able to generate a lot of alpha for yourself, but without having the emotional attachment to the alpha that you're generating. Like, I see all these podcasters, these YouTube guys who are, you know, you get all these influencer type traders who they come in and they have this conversation, that they chat and they make themselves all big and all of that stuff, right? Like, you know, it is really difficult to get real traders to have a conversation. I run a podcast, and I do try and I do talk to a lot of really good traders, and it takes so much time. So it's not easy to pump out episodes every week of different traders. But what you tend to see these days on social media is a lot of these podcasts pumping out apparently successful money-making traders on a weekly, daily basis. This is unrealistic. What bull? Most of these guys are influencers. No offense to anyone who's sitting in a podcast trying to share the dream, right? They're all just influencers, and they're lying to you. But anyway, no, for another day. Now let's move on to the topic at hand, which is futures trading. Right, so I've had a lot of questions on Discord server, especially with regards to futures trading. And in this video, I'm going to talk about the best way to trade futures and the single most important futures trading strategy that I learned and picked up through my journey, and I know it works, right? And it's something that you should be paying attention to. We've spoken a lot of times about things like liquidity and stuff like that and how to do it, but most importantly, how do you do this using Market Profile? If you haven't seen my other videos on Market Profile, most of what we do here is Market Profile, but I do have some candlestick videos, as I always say, is that I will put some candlesticks on there to make it easier for people to visualize. But today, the focus is going to be the profile. So if you have hit this video for the first time, then your learning journey has just started. Hopefully you can check out a few of my other videos before you come and attack this one. But for those of you guys who already know Market Profile and have followed my videos, then this one's for you, right? Everything I do here is free, right? And this was important to me. Everything I do here is free because I got sick of seeing what I see online. But anyway, for another day. Moving on. So let's get back to the charts. So you are looking here at a chart of crude oil, WTI, West Texas Intermediate crude, and this is typically what you would find futures traders trading. Under the futures market is the ticker CL, and you will have the different contract months available for crude. Obviously, this is crude spot, so this is spot index, spot crude, and this is what you tend to find in a lot of the MetaTrader 4 platforms that people love to trade on, or MetaTrader 5, depending. However, if you are a full-on futures guy and you do trade with, you know, many of the known futures exchanges, i.e. the CME, and that's where you get your execution from, or you're with a futures broker, for example. There are quite a few popular futures brokers, including Interactive Brokers, which I use. But again, if you're with any of the major names, then this video is also for you, because despite this being WTI spot, apart from the basis that exists between spot and futures, you're pretty much getting the same price action, right? So every now and again you will get a scenario where there's some kind of divergence between spot and futures, but again, for the large part, you're looking at the same price discovery algorithm, right? And that's the important thing to know. So this video is also for you. So if you're still here and you haven't switched off, you know, your attention span is really, really long, then you are pretty much looking at the same thing. All right, so as I've always said, right, the first thing that you want to consider whenever you come to open a chart is you want to see whether the price is currently trading at a discount or a premium. What do I mean? If it is trading at a discount, it means it will be trading very close to a long-term prior low. Right, so if we take, this is a daily profile, so if we take the swing from the low, whoops, zoomed in there. So if we take the swing from the low, and then we take it to the high, which was the premium, then everything in the middle is fair value, and then everything below towards these lows is a discount, right? That's the first thing you need to get your head around. Value perception. Most people don't have very good value perception. If a price is going up, they really buy into the concept that price is an advertising mechanism, which is exactly what it is, and they buy into that. So when a price is going up, their instinct is to buy, and when it's going down, their instinct is to sell. That's how everyone is taught, but it's BS.
Don't bullshit me.
Bullshit.
Bullshit. Bullshit. Bullshit.
Bullshit.
Prices only move higher to shut off buying. That's what we say as institutional traders who trade with the concepts of market profile and time price opportunity. What we say is when prices are going higher, it is to shut off buying, and when they're going lower, it's to shut off selling. And this is very evident if you have the right tools, because say for example you have access to the central order book, right, which is a level 2 depth of market quoting system. So you got your level 2, you can see all the orders in the book, 10 deep, passive orders on the bid and the offer side. So if prices are moving lower and hitting bids, right, at some point we're going to run out of sellers, right? Because all those that order flow is being absorbed to the downside, we're going to run out of sellers, right? And the moment we run out of sellers, the people who are short, they got to cover, and when they cover, the price is going to keep going higher. So if the market is going down, you ask yourself, is it a good idea to sell it? Because you're going to be short at the bid, and you're going to be short in the hole, as I like to say, right? So it's a completely different mentality. You have to think in a very, it's very counterintuitive. So you have to think in a very reverse way. So you can't look at everything based on logic and say, well, prices are going down, so it makes perfect sense to sell. It doesn't. You only sell at a premium and you only buy at a discount. So first, get your head around that, and I can assure you it will solve almost 80% of your problems to start with when it comes to trade location, which is what I'm just referring to here. Now, the other factor is we want to observe where bids and offers are stacked, right? So we can see what market profile does for you. It allows you to visualize that a little bit more. So if you look here, you can see that on the low side, you can see where the price action was heavier, where it accumulated a little bit more. and that's identifiable by bid stacks. So that tells you that this entire location here is going to be met with a lot of support, because traders are creatures of habit, right? Wherever they put bids before is where they're probably going to put them again, because that area has proven to be an area where liquidity is readily available. And we often always talk about liquidity, but we're not going to talk too much about that in this video. So again, if you go now to the future, you can see that the price sold off eventually on crude and into an area of discount. Why is it an area of discount? It's because we got bids down here and we got value low statistical benchmark against this profile, which is a daily profile. We can see that we were trading near value low. We just broke a bid stack ever so briefly, but we were meeting a lot of support. And you can see I marked it out here, and you can see what the price action is. Also, we can see the market was in a discount relative to at least a 2-3 day profile set. And you can see in a major session, right, which is Q period, which is the 3 p.m. Chicago open, you can see that we had a lot of vicious price action in this, and we ticked up a little bit. The second thing is, are we seeing any attempts to hunt stops, right, which is what we call liquidity grabbing, or essentially, is there any attempts to attack liquidity? And we can see that here, that we ran lower into another major session the following day, which was 3 p.m. and then we closed higher in our period above the liquidity. So we traded the liquidity low, closed up, and that gives you a signal that in a major session that could signal a reversal, because we're trading a multi-day discount, we're trading a daily discount, and we're also trading into a bid stack, and we're also trading at value low, right? Guys, this is definitely not rocket science. At this point, you know that you probably want to start thinking about long positions. There are other concepts we can talk about at this stage, potential value trades. Obviously in this case we have, so if we close up this profile, we have and we close this one, right? So let's do that. We have what we call a gap in value, right? And I'm going to make an entire different video about value gaps, right? So we have a gap in value, right? So all of these are signals that the market has a lot more business to do on the upside. So we're going to start seeing some progression. And then we have an offer stack, value high, an offer stack. So this becomes an area of premium. And if we split this profile, right, so that was our offer stack here, this is a liquidity high. So what do we expect? The market to trade above that liquidity high, which we got in P period, a major US session open. So we should always be looking to trade in a major center open that is relative to that asset. It is no good you trying to get into major positions in crude oil in the London session, right, when we know that Chicago holds most of the volume, right? So if there's going to be any pressure, it will come from that Chicago session. So we can see we had a liquidity grab up here. We have value high here, so that tells me 77.84, somewhere between 77.54 and 84, we're going to get some resistance for sure. And so we trade that liquidity high, and now we're backing up. Where are we in a London session? It is pretty weak, right? So it's 10 a.m. We're struggling. We have a gap in value to the downside. What is that telling us? That there's a huge likelihood that we're going to go short. So we're going to go downwards. Now, if we were short, now there's no guarantees, okay? But let's say that we were short yesterday in that session, and we're holding overnight into a major US session. We don't know where this is going to go. We could further hunt the liquidity up here, run into the offer stack. So the best way to treat these positions, so if you've traded that liquidity low and you're short here, at this point, you'd break even this trade, right? Because you know that you're running into a major session. If we tick up, we want to protect capital so we don't ride into a loss, right? And that means if we're short, for example, 76.72 right here, right, when we came back in the liquidity, then we're looking for a gap fill into bids down here. Now, if we are, let's say we have risk above the liquidity high, what we can do is either tighten that risk for a smaller loss if you want more wiggle room, or break even that trade to 76.67, for example. So that covers spread cost. In these platforms, spreads are really high, and that also positions us to get out of the trade if we get a spike up. Now, it doesn't matter if we get a spike up and we start to push lower, we can always re-enter to the short side, right? So this is what I always say to guys, right? Is that don't worry about protecting your positions if you're running into major sessions and you don't know what's going to happen, because the reality of it is you don't know what's going to happen. You have zero idea. You don't have a crystal ball, right? Someone could wake up in the US session and they decide to push the crude oil market higher. Something could happen in the Middle East instantly and it's going to push that market higher. We don't know. So we want to have a protective approach, right? We don't want to be entering into trades in the London session knowing that there will be a post US session that's going to bring in a lot of volume and uncertainty, especially when we've opened a day when the market is pretty much standing still against even the Asia Open. It makes sense. The US traders are still in control from the prior session. We don't know what's going to happen. Protect your position. And that's the best way to do it. And then you can wait, since you carried some overnight risk, you can wait for this market to drop to the downside, and then you can start looking for buying opportunities as we flow back into potentially what would be discount prices.
Easy peasy lemon squeezy.
Right, so if we do get that downside move, we are already short at a premium, and then we can cover now at a discount. I'm hoping this makes sense to you guys. Okay, that is pretty much how we approach futures trading. So if you are thinking about getting into futures trading and you are not thinking about doing things this way, then you need to rethink whatever it is you're doing. To my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?